Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, Michael Albanese is back with us. He's the CEO of Tradewind Markets, and we're going to learn about a new announcement, origins from Tradewind Markets, and how blockchain technology is providing more transparency to the precious metals markets. Michael, it's great to have you back with us.
Good to be back.
As always, and this was a big topic of conversation when you and I were at the Singapore FinTech Festival, how blockchain is entering more mature markets. When we spoke last, you're looking for blockchain transparency within the gold markets to promote more of a sense of ESG, and now that exists with the Origins platform. Tell us more about that.
That's exactly right. So as you know, Jill, we are a financial technology company that uses a variety of technology, including blockchain, to make asset ownership of alternatives, including precious metals, a lot more transparent. What we did 2 weeks ago is we took the next step, and we really empowered the buy side of the equation. So corporations that want to purchase metal, responsible asset managers that are looking to enhance and complement their own ESG strategy, and we gave them the ability to be very selective about the metals that they purchase. So for example, you might be an industrial purchaser of metal that uses gold for luxury goods, and you may be willing to deal with only certain types of miners and certain types of geographies. Our new Origins platform allows you to be selective and do that, which is quite exciting. You might also be an asset manager that's been doing a really good job when it comes to ESG investing in the equity and bond space, but you may be just starting to scratch the surface when it comes to alternatives and designing an ESG strategy when it comes to metals, when it comes to gold and silver ownership, when it comes to other alternative assets. So it's quite exciting. We're working with a couple of clients now to, number one, do a couple of initial trades and really see what kind of traction the platform and the whole new environment can get. I think the most exciting thing for us about it is we as a company are not trying to dictate new standards. We want to be flexible enough to empower buy side and sell side to really use their own standards when it comes to purchasing metals and selling metals. And think about it from the standpoint of, ESG is only one example, but you could have a corporate purchaser that wants to make sure they are not dealing in conflict zones and they're purchasing from a miner that doesn't operate in conflict zones. You can have another fund that is just starting to design its own ESG strategy in the alternative space, but might be more focused on the S in ESG than the E or the G. The platform gives you the ability to do that. So it is extremely exciting for us.
I mean, it's amazing. The whole story of blood diamonds would not have existed if this technology was available then, because we know how the markets work. You could price out if you're not adhering to sustainable factors such as this. And with this blockchain technology, it's everything from mine to warehouse.
It really is. I think the few interesting things about what we're doing and what others are doing as well is we've got almost every vertical represented in our company right now. So we've got the miner, we've got the bank, we've got the purchaser, and several steps in between. So that's number one. I think number two, you also have. I was at the Singapore event, as you said, the other day, right? And I think there was a stat that last year, over $160 billion in green bonds were issued, which sounded tremendously large to me, right? I think about that, and I say, what kind of data? If this takes off, if green investing and ESG investing continues to take off, surely these new products are going to need data that underpin them. If we want to empower the next generation of issuers and the next generation of investors to invest responsibly. So what we've announced the other day is very important. It's a small stepping stone along a much broader path of developing data and developing tools to empower this next wave of responsible investing. I think when I heard that stat, it did remind me of a couple of things historically too. And what I was very impressed by, as we were talking about a moment ago at the event last week, is I started to hear a lot of detail about how the market was going to get from point A to point B when it comes to transparency and responsible investing. And I heard a lot less fluff than I might have been used to in the past. And it reminded me of the past 20, 25 years. If you look at the history of financial markets, I spent most of my career, as you know, in banking and securities markets. And I look at other waves of investing. So I don't know if you remember project finance years back. The world was looking for a more responsible way of attracting capital to project financing in places like sub-Saharan Africa and places like emerging markets at the time, which are today have emerged, quite honestly. And one of the things that made a difference back then is PPP, so public-private partnerships, or being able to diversify away from political risk. Once you solve those problems, it became a lot easier for the money to invest in those projects. And I draw a bit of a parallel today. So wouldn't it be interesting a couple of years from now if the transparency that companies like Tradewind are bringing to the table start to make it easier for those pools of cash, whether they're pension funds, whether they're sovereign funds, to find their way to the responsible, transparent project in some of those markets that need them. So it's a bit of optimism, but I think it is well-placed optimism.
All right, Michael, thanks so much for joining us at MarketSite.
Thank you, Jill.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.